Hello, dear friends. My name is Clive Thompson. A few minutes ago, Nvidia brought out its quarterly results for the second quarter of 2025. That's the quarter to 30th of June 2025. Before they brought out the results, the market was expecting them to report non-GAAP earnings of $1.01, and the market was expecting them to report revenue of 46 billion or 46.05 billion for the second quarter. Expectations are high, or were high, and the analysts have been anticipating these strong results, and this growth would represent a slight slowdown to the 122% increase they reported in the same quarter last year. Now, Nvidia is a very important company because it represents 8% of the S&P 500. So whatever Nvidia does will affect the entire market. So let's have a look at what's going on with the results and what's happening to the price of Nvidia. So I'll start with the results and then we'll go from there. So the market was expecting earnings of about $1 per share and revenue of about $46 billion, or just a fraction over. The actual numbers were stronger than that, better than that. So revenue came in at 46.7 billion and earnings were $1.05 a share, better than forecast. So growth is still huge. Revenue was up 56% from a year ago. Data centers, the core of Nvidia's AI business, rose 56% year on year to $41 billion. The new Blackwell chips grew 17% in demand. So is AI slowing? The answer is no. The numbers show the opposite. The AI build-out is still accelerating. Cloud companies, governments, big corporations are buying more capacity. Networking sales almost doubled compared to last year. What about the competition? Rivals like AMD, Intel, and new chip startups are pushing hard, but Nvidia is somehow keeping its lead, at least for the time being. Its chips are seen as essential, especially those AI companies who want to be the most powerful and the fastest. And that keeps the prices very high because demand is still stronger than the supply. Now, we don't know how long that's going to last, but that's the situation today. There's huge demand for the fastest and best chips. Now let's look at a few risks that we got to face. We've still got tariffs on China, and Nvidia did not sell any chips, any H20 chips that is, to China this quarter, they say. Instead, they shifted those chips elsewhere and sold them elsewhere. And obviously, they're not saying, but we wonder what happened to those chips. Did they all find the right destination, or did some of them find their way to China? We don't know. So even if the tariffs hurt, Nvidia is adapting and it's managing to sell and buy what it has to buy and sell and make a good profit. So what happened to the share price? Well, let's have a look at the market. It's down as I speak, $4.42 from the close. It closed at $181.60. I'm looking at the screen here. It shows me the price is roughly 177.15. That's down $4.45 or 2.47%. So what's this showing? It's showing that the market was really expecting fantastic results and they got it, but there were a lot of people who bought the shares ahead of these results expecting to make a quick profit, and now the news is out, they're bailing out. They're not willing to take any more risk because buyers haven't suddenly arrived en masse. And why would they? Because there can't be anybody on the planet who doesn't know the fantastic prospects of a company like Nvidia. Now, I'm not saying it's a great buy. What I'm saying is the company itself has got great prospects, but as far as whether it's worth buying, it's a rather overpriced company with a very high price earnings ratio. So I personally wouldn't be going into it. Just turning my head to the screen now, it's continuing to fall. The share price is now down $5.25 or 2.90%. Ladies and gentlemen, I hope you like this very short video about the Nvidia results. We'll see how tomorrow plays out. Please like, subscribe, and I'll try and answer any comments you got. Yeah, the share price is down $5.55, 2.99% now.